All right, let me see if this is working correctly. Pardon our technical difficulties. Level sometimes pops up and rears its ugly head. We are live. Welcome back to another week, and we're going to try and stick to our schedule and do Tuesdays and Thursdays, although sometimes things tend to pop up and we end up, tied up somewhere. We'll at least give you notice of that, so we'll let you know. But this week, I think Tuesday and Thursday works. So anyway, it's been pretty choppy on this open this morning, and we're going to expect some choppy range until FOMC tomorrow on the indexes. But we've got a few equities we're looking at that are starting to make some moves. And if you're looking at the screen here, you can kind of see there's a couple of really interesting charts setting up, and then we got more to talk about. So, kind of looking into what I find that I look for these all the time, but pretty much every FOMC event or Jackson Hole or something like that, probably 9 out of 10 of them, I'll find a diamond pattern. And today's no exception. We've got one perfect. I mean, we've got the nice broadening pattern going into a contracting pattern in the middle of the day. Sorry, there's a puppy going nuts to my left here. And it tends to give us price targets in range, and we're typically going to find that it'll either follow a bear channel or a bull channel, and then we get all the range in between. So watching QQQ like a hawk, and I'd like to see this give us a nice breakout play tomorrow. The likelihood of us opening at either of these pivots is pretty high, and then we'll see which way we break once old Jay Powell hits the podium. So
just oh, sorry, go ahead.
No, go ahead. I was going to wrap it.
Yeah, so I was going to say this is the first FOMC in quite some time. We don't know what they're going to do.
Yeah.
We know they're going to cut rates, but we don't know by how much. And and then we don't know. The market had a great week last week. So far today, decent day. We don't know what that's pricing in. So we really have no idea whether they're going to do 25 or 50. We also have no idea how the market's going to react to 25 or 50. So, I mean, we've been telling the people on our newsletter list past couple of days have hedges. I bought some SPY puts today. I financed them by selling some 0 DTE SPY puts for today. Yesterday, I bought some VIX calls, financed those with a SPY credit spread. So, just in case, I really do think you ought to go into tomorrow with some hedges.
Definitely a good idea. And I love that you're kind of running a similar strategy that I run when I'm trying to lock in a hedge for a net credit or even a zero cost or even a very low cost by selling against it. That's smart.
But in along those lines, I mean, what I try to do, I mean, I love options because options are fixed risk. But if I can skew the risk reward, so I mean, if I'm just buying a put or a call, yeah, I've got fixed risk. But if I'm wrong, I lose everything I put in.
Right.
There's a lot of times, depending on what you're trading, you can set it up so that if you're right, you still have unlimited upside. And if you're wrong, you just break even. The flip side is if it doesn't move at all, that's that's where you end up losing money. But I like mixing in trades like that to just outright puts and calls.
Oh, same. I mean, I've had some where like I'll do on QQQ and SPY, I'll do even as close as next day expiration. Go long on whichever contract I want to be long on, and then use price action to leg into a debit spread by selling the next either put or call strike above or below the price. And usually I can lock those in for a net credit. So like no matter what happens the following day, whether the spread is at the money, in the money, or way out of the money, I can't lose because I've locked in that credit by selling the short leg for more than I paid for the long leg. I do that all the time when I'm expecting a pretty good amount of range the day before I expect a bigger move in price action. So today I'm going to be pretty much flat. Most of the things I've got going are option sales on like TNA. I've got some wheel trades moving in Intel, and I will have one maybe later in MU now that we're thinking about it. But my idea is I'm always able to generate income on that over time. Even if I end up holding a bag for a while, I can still generate income on it by selling options to open. But when it comes to the ETFs, I tend to, if I'm just going to trade directionally, either run debit spreads or leg into a debit spread that I can build for a net credit. And then that strategy works out great because the next day, if it ends up in the money, I mean, I can just kill it. I can sell it at open and knock it dead. That's where I'm making some of those incredible returns. Sometimes 3,000 and 4,000%. It's crazy. Those are tending to be directional. Those are not like typically going to be spreads for me. Those are going to be outright options that I lock in later. But when I'm making 2, 3, and 400% returns, it's because I've locked in something on a credit as a debit spread built, and then take the value that comes in on the open the next day if it's at the money or in the money, and just crush it. I mean, my risk is so minimum; it's negative. You can't
Nice.
put a percentage on that, but you could put a pretty nice payday on that, and it works out well. It's a blended strategy. It's kind of a hybrid of realistically a wheel strategy. You're long something and you're selling credit against it. So it's the same strategy, just a much shorter time scale. So it seems to work for me. And it's kind of based on a hybrid that I kind of figured out compared to the traditional wheel trade, where people would sell monthlies and just rotate them, buy them back to close when they hit a nickel, and then roll them out and just more or less passively trade that strategy. I'm a lot more active in it. I tend to roll in and out of those on price action. So like if I see a nice range that's giving me a good broad stroke and I'm expecting it to meet that range again, I can go and leg out of that short position, buy it for much less than I sold it to open, and then sell it again for possibly more than I originally sold it to open, just in the price swings, and then roll in and out of them day to day. So like I can take the typical monthly strategy and turn it into a supercharged strategy by compressing the time frame on it and just using a price action. So taking my day trading skills and molding them into swing trading with short options. It's quite the thing. I love doing it, and it's been paying my bills for a while, so can't complain about that. No one will ever listen. So watching this diamond pattern, I think we're going to see some pretty big range extension into tomorrow. I'm not going to predict exactly where price is going to go with FOMC. I think the market's kind of priced in a lot of what they're expecting for FOMC tomorrow. But if things get a curveball, if they're a little bit outside of expectation, we either have a bear target probably down here in the 470 range for QQQ, or a bull target up in the 480 range. So either or. But we get pretty easy targets with finding these angulars from a diamond pattern. And usually that's why I even bother drawing them, is because it gives me a price target for if it breaks. Typically it's going to go there. Moving on, we got some stuff to look at on our swing trade list, and we got some interesting stuff. I can kick off with your list first if you like.
All right.
Let's see. We had
What do you got first?
We had TEM. Let me get my full grid up here.
So TEM, again, I mean, I've talked about this here and all the time in my newsletter. This is right now the one digital biology stock I trade. I think digital biology is going to be massive, but for most names, it's a year or two away, maybe more. But you see some of the stuff AI can do, like, I just saw something a week or so ago where I think Google was developing the technology that can listen to your breathing and diagnose illness.
Wow.
I mean, stuff like that is just insane. So I like buying this one on dips. You see on the chart, it pulled into the 50-day, had an undercut and rally, big move up yesterday, dipped today. So I added to it today. This is going to be a volatile one, but, digital biology is going to be an area you're going to want to be in, at some point.
I think you got a point there. And, looking at it myself, I pull it back into a 4-hour chart. It's got the most perfect setup for a reversion trade. Also, and I've walked through day trading strategies to find swing trading targets. It's all the same price action, just different time frames. We had this wedge. We have our nice regression line. We came out of a pretty nice measured move to top to bottom, rounded off, came through our previous angular resistance from our wedge. That's our primary move, came through that regression line, went to the next reversion target, this high here, tested that for support. So I think we have a setup in the midst for finishing this reversion trade, this whole trend here, split it in the middle, target of about $59.90 to $60, and watch this today and tomorrow in the dip buying sessions. If it holds this angular support here, I think we got a pretty good shot of finishing that reversion trade right up here. So this might be, a pretty good swing from about $50 to about $60. I like it. Good setup. And then I always tend to try these boxes, and I find measured moves pretty readily with that. And it kind of lines up the same. You got the high to low. Take the base of that to your reversion, or where you'd expect consolidation to occur. It gives you the same target roughly. It's close enough. But reversions are pretty nice trades to take, and I like this setup. That's a good one. You can see this has done this in the history here. You have the high, you have the low, reversion target met beautifully. Same. Love these kind of setups. This is a good trade in stock. I think I might start swinging this one.
I like it.
Another one you had, let's see the next one. Was that OHLO? OKLO.
Okay, yeah. So another big theme around AI is power generation. Probably going to do I may do a digital biology ETF in a couple of years. AI power generation, I may do sooner. I'm already in talks with a group to partner with on that. And one of the areas I think is going to be huge, it's going to have to be, is nuclear. We've talked about NNE and SMR, but I used some recent weakness to pick up some OKLO yesterday. Interesting. Looks like it's trying to bottom out here, bumping up against the 20-day EMA. I'd like to see it break through that. But again, these nuclear names they're speculative at the moment. But I think A, you're going to need nuclear, and B, I think you're going to see a lot of these big utilities buying out a lot of these small nuclear companies.
That's usually the case. I mean, they'll take some of these, and companies like this, they're penny stocks for a reason, but they slowly build value. Once they've completed what we like to call market structure, there it is. You got the hype wave, you got the big old consolidating descending channel of capitalization. We had a potential for a measured move here that failed. We came down and actually split that difference down to a new low. And now we're making a reversion trade. So we're reverting this trend here. Kind of a nice target. I think it may have a couple more waves of consolidation going into the end of the year, but we should see this start to play around that $7.25 mark. Once we accumulate and break above that, we could revert this entire thing and start shooting for a $10 bill. And penny stocks are usually pretty good about following market structure. I kind of like this one. And then short term here, we have a pretty obvious measured move setup. There's your mean consolidation. Same target, reversion of this trend. About $7.25 is a short term target. So definitely bullish. I kind of like this one. And there's your range break. This should be appearing on a breakout scanner any day now. Any hour now.
Cool.
That'll pick up some attention soon, I'm sure. Once it breaks that 2-hour 200, it should be right in there. And then there was another play you're making on AI in the other space, the chip space, Micron.
Yeah, so Micron is, I believe, going to be one of the kind of main beneficiaries of AI. I mean, not like NVIDIA, Apple, some of those guys, but a secondary player. And I just like this spot. I mean, undercut and rally the August low, undercut and rally at the 10-day. So, I bought, I added to this yesterday. And I mean, I like the stock long term. On this, I added options that, I mean, I think I go out to 2026, which I don't normally do. But, again, I think, this is going to be a company you want to be in, and, didn't want to have to worry about expiration here.
I'm a bit tied up on a lot of wheel trade positions, but I might consider this one. I might just run a synthetic on this one. Um, got a nice double bottom. We got reversion target here. So short term is going to be likely bullish, returning to about 97.50. Outside could be back to R1 on our double bottom here up in this liquidity zone around 110. And then if we revert half of this entire trend, eventually, if we do break out of market structure, we could see a push to 120. I like this. And when I say synthetic, that's a whole different ballgame. I'll take and buy a long leap at the money, sit on it till prices appreciated some, and then I'll start selling covered calls against that. And then I can also go at the same time buy a put at the same strike as my call on the leap, and then sell puts against that. It's kind of neat. I can sell it as a synthetic wheel trade position. A little more complex than the standard one, but it does the same thing. Generates income.
Oh, pretty cool.
I love synthetics, and it's funny. I was talking a while ago. There was an offer for some I guess collaborative stuff from a major broker, and they started kind of interviewing me, and I started talking about synthetics. Like, you know about synthetics? Yeah, man. I'm not just your average retail trader, man. I know some things. And like, wow, their eyes lit up. They're like, man, I was back in the day on the pit, trading synthetics, and here I am, high up in this bank I work for, or this broker I work for, and meeting some dude off the street talking about synthetics. That's pretty odd. But yeah, synthetics are great. Look into them. Do some research. We've got a little bit of material on the Bullishbrs page about running synthetics too, and it's pretty intricate. But once you understand how they work, they make a lot of sense to trade. And this is something where I think that would work out very favorably. We wanted to kind of review some of the stuff that we pulled off last week, and I'll come to some confessionals on a couple things myself. But let's go through what I'm watching for some good bull setups first. I've got just 3 on there as well. I've got something that's completely off the scale on what you're looking at, but I'm looking at Snapchat. Snap is something that's been kind of a doll for me. I've been able to trade this very successfully. We've looked at basic market structure. It's done its thing. It's consolidated in this range, and it's got some good trades swinging around in this range still. And we have this very beautiful double bottom setup with a reversion target of about $12, $11.90 to $12. Just kind of being conservative on a low end of consolidation where this gap is on the daily chart. But we've broken above R1. We've come down. You can see in this bar here from this daily, we tested the mean between R1 and L2, or R1 and L1, whichever you want to do. Whenever we have this pattern, we look for a test of support at the difference or the split between high and low. It did that. Perfect wick yesterday. Today we're likely to close a spinner here, and if we hold support above this resistance level or this previous resistance level, and I'm going to put a new pivot line right there, about 950. If we hold that, we could see a nice trend to start attempting a close of that gap, or about half that gap is where I like to put the mark. And this could produce a pretty nice bullish swing trade for us swing traders out there, and options traders alike. So targeting about $11.90 to $12. Pretty obvious. Just needs to hold support here. So
yeah, I do really like this chart. I mean, to me, if it breaks 10, you could easily fill that gap.
Pretty easily. And then in the short term, I mean, if you want to get a little technical on, well, let's go to the 2-hour chart. You can see the previous consolidation here, back from this drop here. That lines up perfectly with a measured move from this being our primary. It's about there, about $10.50 or so. So it all makes sense. It's looking pretty damn bullish, and I'm liking it. It also showed up on our bullish breakout scan yesterday, and that's where I like to look for the pullback trade. The entry is there, and we're looking at if we revert back down between 950 and 970, we could see a nice pull, accumulate some buyers, and take it to that bull target. So definitely liking this one. Another one, and we're looking at the other elephant in the room again, NVIDIA. Kind of followed through on pretty much everything we predicted so far on this show, as you've been keeping up with us. We've nailed these reversion trades so well, and now we're consolidating again. Are we going to take another bull swing on this one? I think we got a pretty good shot if we can hold support at like 117. We could see a push up into 124, 125 into this liquidity zone. If we break that, dang, if we don't hit that 86.6 fib at 127.90. I'm liking NVIDIA at this point, and I'm sure NVDX is probably starting to see some flows accumulate in this area. What do you think?
You know, we haven't really seen a lot of flows into NVDX. And I mean, volume's dead today, you know, across the board. I mean, I think pre-FOMC.
Right.
But I mean, you know, NVIDIA is the 800-pound AI gorilla. To me, dips in NVIDIA are just a gift from the market gods.
Agreed. Yeah, that's a praise Odin moment right there, man. I think we could see it follow through. This wedge is looking pretty tough, and you know, the setup says we're likely to return to at least this liquidity zone up here, and if we don't, sure, we could pull back and set into you know, the 107, 108 mark again. But as long as the news remains fairly good on NVIDIA, I think we got a pretty good chance of being a little more biased to the bulls than the bears. But I'm also going to do some dope for you live on TV or live on YouTube here. I love to draw these wedges, and I love to find the impulse moves within those wedges. And I'll show you guys how to do that real quick. This is a free lesson from Bullishbrs here. So whenever you see these, kind of draw them out and draw a regression line in the middle. And then you can find that it's pretty easy to figure out where the qualifying move is within the second impulse in there. So find the angular. There's a good one there. And if it's going to break bullish, it's got to break out of this high on this box and start running for this liquidity zone. If it rejects there, it'll usually pull back an equal amount below the wedge. And then if you look at this wick, there are some buyers here. So if you start to see this wedge fail and it holds here, that's where the real bull move is, where you get the dip buying crowd, or the BTFD crowd, I like to call them, waiting right there. So anytime you see a bull flag when it looks like it's going to fail, watch that area. If it holds there, you can typically get a better entry than everybody else who's going to enter up here. So keep an eye on this thing. Next couple of days, I think we're going to see some good volatility. Of course, FOMC's tomorrow, and from there we'll see either a nice bullish swing up to our liquidity zone and our possible bull target for that fib line. Worst case scenario, we end up back here in this liquidity zone, back to the 107s, where we'd like to buy it more. So pretty simple setup on this one. Just wait for this wedge to break. It'll give you a clue. Looking at the last thing on my list for bull moves that are setting up, this one's more of a continuation, but I think it's got that potential. I'm going to keep an eye on it. I'm not quite calling a price target on it yet, but I've got some ideas. AT&T just takes a massive amount of money to move this thing. It's a mega cap, but my gosh, the setup is pretty plain to see. You got your nice primer.
I wish we had this conversation a week or so ago. I actually have puts on AT&T that I'm only down 95.24% on them.
Yeah.
So
I'm sorry, man.
that's okay.
It's one I thought about looking at, not last week, but the week before. And when it hit this target, I was looking to maybe see being bearish myself on it, but then it started burning through it. You know, and I'm just like, oh, maybe I'm not such a bear anymore. I looked at it again today. I'm like, oh, well, it's setting up for 2-for-1, although it hit the halfway mark and popped the wick up. So we're looking a little further into this thing, and maybe we'll pull back here, and you might get some of the put money back. But if it breaks out above $22 and a quarter, look out,
Yeah. Now
because
my puts are worth 2 cents.
yeah,
So
it'll take.
getting some of that money back is somewhat unlikely.
Yeah, not likely. I mean, you might be able to get back to 5 cents.
Maybe.
At least it's a defined risk when it comes to options, and that's kind of the.
Exactly. I put in an amount that I'm willing to lose, and I'm going to lose that.
Back in.
They just ticked up to 3 cents for a second. Someone was
Woo,
listening.
hey, there you
Now
go.
they're back at 2.
You got liquidity now.
Yeah.
Back in the lockdown, I made some pretty good wheel trade maneuvers in this mess, and I ended up getting called out on my on the call side, and I decided to quit right in that 86.6 fib up here at about $18.60 towards the end of where am I? No, that's not the lockdown. We're over here. Duh. I ended up getting called out on that. This was back in before the lockdown. Sorry. Called out back then, and then I decided to never wheel it again at that point because it just ran away from me. I didn't realize that this was up here for measured move targets. But then we had this massive pullback and this just ginormous double bottom, so I took a swing on it instead of running, with the wheel trade on it, and I'm kicking myself because the amount of premium I could have earned on that between then and now, I would have been at a negative cost basis on it by now, kind of rolling through what I would normally do on a lower cost equity. Kick myself, but it's such a low amount of premium. It's only about 7 or 8% a month on that average versus your outlay, so it takes some time. By now, I would have been at a zero cost, so I kind of kicked myself on that one. I should have stuck with it. Long story short, though, did make a good bull swing up to this 1-for-1 measured move. I think we talked about this over a month and a half ago when we were still bagging on Kramer. It was one of Kramer's call outs. And then we went the opposite of what Kramer said. Kramer was saying sell, and I said, no, we're buying. That was the Kramer bar, and it got ripped off and went for that 1-for-1. I recall that. And debit spreads, I closed them a little early. I closed them before it hit that target, but did well on it. For now, I think we're going to consolidate in this area maybe at a 1.5 move. It kind of makes sense because it's about the mean of this area here. But I think we'll get another trade out of this before the end of the year, and we will either finish this bull move or we will go for a reversion back down to that monthly 200 MA right around here, so around 1860 or so. Could go either way, but it takes so much time for this thing to move. It's such a massive cap. It takes a ton of money flow to make this thing do anything. So it's a very slow mover. It doesn't yield very high on the wheel trade. I guess that was a good idea to step away from the wheel trade on this one. I had better things to do with the capital, of course, but nonetheless, for your long-term investors, learn that wheel trade strategy, and it will benefit you very well on something like this. Because you'll be outperforming the price appreciation by a lot at 7 or 8% a month. That adds up. Put it in a year. Should we review the stuff we called out last week?
Sure.
We had quite the list last week. Let me get into it. There we go. We had SO, which is one of your babies. That was a beautiful play. We've pretty much nailed the 1-for-1 target. I stacked another block here because I think it could go higher. This thing has just been trending forever. And if we break...
And again, remember, this is the AI energy trade right here.
Right. And it made that 1-for-1 just beautiful. We've actually been talking about this one for more than a week. I think we did 2 weeks on this one. And we're right in that target. We nailed that $90 bill. Now we're kind of looking for consolidation. Maybe this continues to run a little higher and go for a 1.5 or a 2-for-1. So we could say maybe in a month or so we could see like 101, 102 and extend all the way on up here to like 113, 114. It's very possible this thing just stays bullish, but we've completed a 1-for-1 here. So look for some speculation in this area and some consolidation, of course. And I think maybe over the next few weeks we'll be okay coming out of this. But yeah, that's a pat yourself on the back. We did good calling that one out. Another one you were calling out, NNE, another nuclear player. This one did very well. It completed our measured move target and then some, hit the reversion target or just short of it on a daily, and now we're starting to see it sell off. I'm going to look for a pullback to say about $11, and I'll start watching it again for a bull move. So
Watch the 50-day here. It undercut and came right back above the 50-day today.
yeah, it did, didn't it?
It had to give some back. It moved from, basically doubled in a week. So
Yeah, when it moves that quick, you gotta, if you're not taking profit, you're gonna kick yourself because you're gonna give half of a half back. But looking at the measured move blocks, I mean, yeah, it's right at that halfway zone too, so kind of right under, but at that 50-day. It could consolidate and continue higher here, but it's more or less met the reversion target we laid out. I'd love to see it pull back a little further and hit that $11 bill again, but it may not. It may give us a consolidation about half this move, and then figure out another bull impulse would be. We'll just draw the box. I accidentally switched my default color again. I hate when I do that. Jeez, no, do that. Thank you. Okay, so possibly a 2-for-1 off this impulse here, but just be aware that the reversion line's right there, so that's going to be a key resistance area around 1678 or so. But if we breach that, we've got a pretty easy range bar to spot a little higher from that as well. So we could see this thing trend, but either we'll accumulate here and continue a bull swing, or we will pull back a little further and then continue back into that range. But we did very well on that call out. We nailed our target and then some, so I'm good with it. GEV was another one, and that thing blew us away. I mean, we're way outside of a 1-for-1. We damn near hit a 2-for-1 already. Very nice.
yeah, anything involved with AI energy, it is hot, and it's not sexy. It's below the radar screen.
Yeah, no one's watching it, but it's making some nice moves. We held that liquidity zone just beautifully, and now we've done every bit of the structure we'd expect out of this. We're above a 1.5, so we might just as well finish to about 245 or so. That's a pretty good probability on that one. I like to draw our analyst price targets, and we're the analyst now because we're not bagging on Kramer anymore. Right in that range. Looks good. That's been IPO day was back here in March. That's a clean 1-for-1 altogether, and then some. Yeah, this thing is hot, and I don't know why it's not on many more radars. I can remember we put some dope on it in the past. Maybe Kramer might have mentioned it back in the day, but now we're playing with it. We can forget about Kramer. No one pays attention to him anymore anyway. All right. The next one we talked about last week was MSTU. No, that's the new one. All right. CCI.
Yeah.
We'll get to that. Hold on. I got to save that enchilada. CCI made that 1.5 beautifully. We hit that mark, and that was first a reversion target for this trend here. So again, patting ourselves on the back for that one. We could finish this out with a full reversion up to the next step, which is like 136. But I'd expect some accumulation here around 120 first, and then we'll see what happens on the outside of that. But we did really good, man. Last 2 weeks, we've been killing it. And I can't complain. No one will listen. CPRI, another one, did exactly what we're expecting. That beautiful 1-for-1, more or less. I mean, we got a little bit short of it.
Watch the 200-day here.
Yeah.
It came above and then broke right back below.
Yeah, so short term, I think we're going to see some accumulation that's going to set up on a 2-hour. And with any luck, we'll get a wedge out of this and then a finish move, at least to that 4150 target. And then maybe we'll see another pullback. But yeah, it did pull back very suddenly above that 200-day. Let's see. I see a short-term reversion target right there. Possibly a pullback to 39, and then we can accumulate and cook off. But watch this for a wedge later on. But we did make the bull call, and we almost got to our target. Pretty close. But we were right in the direction. The one that kicked my butt and dropped me 2 points on my accuracy rating, I'll admit it, I'm bag holding it, but so far it's doing pretty good, Intel Corp. I'm looking for a little bit of consolidation to give half back of yesterday's burst move here. But I was looking to sell some calls and puts on this thing, and I just couldn't make it above cost basis enough to make it worth selling covered calls. So I've been holding the bag since I got into this thing, and now I'm looking to probably sell some covered calls in about the 25 strike range, I think, and then I might see a little bit of accumulation here, and then maybe we get continuation out of it. But so far, we've almost given back half of yesterday's move here, and if it holds above like 2090 here, we got a pretty good shot of wedging out here and then continuing. So we may see this be a nice primary move, a consolidation, and a secondary move. And
This is one that I've never trusted. So, I mean, I don't trade this name.
yeah,
Interestingly, I mean, I am banging the table for AI, but just like we saw in the .com boom, you're going to
right,
have winners who are the companies that execute, and then you're going to have, the companies that don't, that, 10 years from now are going to be trading at the same stock price they are now. And just to me, longer term,
right.
I mean, you could get a gap fill here, which would be, great. Longer term, to me, Intel is one of the companies that's going to get left behind, which is why I don't trade it.
It's not necessarily one that you want to swing trade, that's for sure. I was looking at a dead cat bounce for a wheel trade opportunity
Oh
to
yeah,
maybe
yeah, totally.
go for reversion, and I'm okay with being wrong on that because my cost basis is pretty close to price now, so I'm not like holding a huge bag on it. But eventually it'll start producing some premium for me, and I can either walk my way out of it, or I can just up and close it for a small loss and move my capital somewhere else. Currently, the yield would have been like maybe 1% a month selling covered calls on it, and I just don't bother with that, so I just held the bag. But now I'm thinking this pullback, I might be able to sell a put for a reasonable cost or reasonable amount of premium, and then if price action pops back up to the upper range of this consolidation I'm expecting, I can sell some covered calls above my cost basis and start to make some returns on it, and at least drop my cost basis down to match price and walk out for a wash. But either way, I'm thinking maybe if we get above this range, I mean, treat it like market structure. Just accumulates, gives you a first pop, a second pop, and then typically you'll accumulate in here and maybe make a reversion trade out of it. So I'm still generally a little bit bullish for at least a reversion trade on it. But overall, yeah, you're right. It's not one of the companies you want to invest long term in. As per, this was mainly bad management decisions that kind of caused this thing. And
Well, yeah, I mean that's right. You've got to execute.
yep. And it takes a while to work those things out. I mean, I remember back in the day, like AMD used to trade between like $9 and $11 for like ever, and it eventually broke out and just made a mountain out of it once they solved their management issues. And their issue was they were kind of running like an old mom and pop shop. They tripping over a dollar to pick up a dime type of deal, and just went nowhere, spinning their wheels. And then they finally started making some changes in management, and bam, they executed. They did well. AMD kicked it out of the park. Now we're looking at Intel. I'm kind of looking at it a little bit the same way. If they start making some good decisions and start cleaning house, getting rid of the I'll just call them bad managers. I don't want to call them any other names because I'll get in trouble, but you know what I mean. Clear that off, and we got a shot at maybe a long-term reversion trade back to like $32, but it's a long shot now, and patience is a virtue, but not always. And if you're holding bags, and that $20 bill per share is about the mean of where I'd like to be in this situation, and I'm not there. So I'm holding the bag on this, and that might knock me down 1% on our accuracy rating, so we could say 93. But I don't remember talking much about Intel, so we'll keep it 94.
Yep.
Anyway, we got to let the enchilada out. We got to talk about two of your ETFs. One that's already launched, that's doing very well, and then the other one you're about to launch tomorrow. I'll let you run with that.
Yeah. So last week we launched Guns, GUNZ, and I think listeners will understand at this point that I love being thematic and looking at what are the likely investment themes going forward. And I think self-defense is going to be huge. I think the crime numbers that get reported are just as accurate as the jobs numbers that get reported, which
Right?
is not. Um, and people get lost in the minutia, like, oh, I mean, are they eating cats and dogs in Ohio? I have no idea, nor do I care. What I care about is, people are feeling less safe. And at the same time, you have talk about defund the police.
Right.
And more people are going to be forced to take their own defense into their own hands. And, this index has like doubled the S&P over the past 10 years. And we launched a week ago and it's almost doubled the S&P since launch. So I think this is an area that thematically is going to be big. And it, hopefully we'll start to get some volume and I can get some options on this. I mean, I'm trading the shares, which
Right.
is fine, but I'd rather trade the options.
That's where the income
So
is, man. Leverage, baby.
yeah, so we got that, and then tomorrow we launch 2x MicroStrategy, long and short. So MSTU
And
will
there's
be the
no
long, MSTZ will be the short, and I think, don't hold me to this, I think that it will be on day one the most volatile ETF in the United States, which is kind of cool.
I'll agree. That's going to be, you know, influenced by a bit of hype, but a lot of people are gonna take advantage of what that represents. And I think you're right. I think that's going to be a very popular ETF. And then same with guns here. I think it's a good theme, and it's going to I mean, a little marketing is all it takes to get that in front of the right people, and everybody's
Yeah.
gonna be. I'd be like, not saying it'll be the new spy, but it'll be pretty damn
No,
popular.
I mean, but it's a theme I think you want exposure to. Interestingly, I believe, and don't hold me to this either, that of all the ETFs out there, it's the one that has the largest exposure to Palantir, for
Right.
example. It's got, we're going to rebalance it today. It'll have about a, close to 6% weighting in Palantir.
And we always talk about this in the Bullishbrs when we're looking for particular equities to trade within sector rotation and so forth. Go check out the ETFs, and you can take them apart, and you can see what their weighting is and what they're in. Their top 3 or top 5 holdings are typically going to be the movers and shakers, and you go and you take your
Which
technical
you
analysis.
should do, by the way. A lot of ETFs out there are horrifically structured.
Yes.
And AI is one of those areas where, a lot of the AI ETFs are just Fang and Friends, which
Yeah.
is fine, but you could just buy the Qs for whatever those are, 10 basis points versus buying some AI ETF for like 95 basis points.
Right. So I mean, it makes sense to take them apart and do some looking in there for equities to trade, but at the same time, once an ETF has built enough popularity, it's got enough flows and enough volume in it, and then you start opening up the options chain, particularly leveraged ones, which I love to do. You got some options income strategies that just kill it in those. I mean, I'm in my average on my TNA position around 18% monthly in premium returns on that, and just functioning beautifully. I convert that into something like TSLT, TSLZ. or go into the NVDX or NVDQ is the bearish one. I can never remember.
MBDQ, yeah, that's the bear.
I start trading leverage on those, and when the volume's right, it's just the perfect vehicle for a modified version of the wheel trade strategy, and it'll even work for a traditional wheel trade strategy, which I can't talk enough about. I mean, I'm beating the wheel trade to death, but it's working. It's an income strategy that just doesn't quit. I've taught this to some private equity fund managers who use it on things like TQQQ and a couple other leverage ETFs, and the bulk of their AUM is operating in that structure, and they're killing it. So I mean, I'm onto something here. you know, it works for
Yep.
me, and I can teach it to others. So that's what I intend to do, and I'll never stop talking about it. It's something that just has so much potential for everybody in the market, not just retail, not just fund managers, but everybody. And it's got something special for you. Anyway, I think that kind of wraps it. Unless we got anything popping all of a sudden in the headlines.
No, market's starting to weaken a little bit.
That's kind of got that look, and I like to look at the small caps. Speaking of TNA, oh, let me get out of the HA candle mode here.
Speaking of horribly constructed ETFs, and and I trade it because it's the only thing to trade, and the options are liquid. Is IWM.
Yes, I like IWM too.
Right, but it's horribly constructed. It's
It is.
got a bunch of crap regional banks, speculative biotech. Um, if you want, there's a good small cap ETF out there. It's escaping me at the moment. But if I were saying, hey, I want long-term exposure to small caps, I would not be buying IWM.
No.
But for trading, IWM's liquid, the options are liquid. So I'll trade it all day long, but it's just a piece of crap.
Yeah, it's a what do they call it? The diminishing asset.
Well, not like the VIX ETPs, which
Yeah,
or the gift that keeps on giving when you're buying puts.
right. Agreed.
And UNG, which is actually finally UNG went negative, thank God.
Yeah, I'm gonna have to take another look at UNG soon. I think.
UNG, it's not as bad as the VIX ETFs, but they got the contango issue also.
And
So I often, including at the moment, have puts on it. I've been getting my ass kicked. They were up like 3 days in a row, but they finally turned red.
it's for me those are like whack-a-mole. I mean, when it pops up, you put it down. Hit it with a foot
Exactly.
hammer.
I've got a counter trend model where it just triggered put buying on it yesterday, and then I have a trend following model that's been short for like 30% down move, which has
Right.
been great.
I was looking at, I put up a comparison between TNA and IWM, and the charts are identical. But like my yield to outlay is maintaining 18% on TNA. On IWM, if I was to run the same strategy, like what last time I looked at it, it was like 4% monthly, and it's like, yeah, that's crap load more money out for a lower percentage return. Not worth my time. I'd rather, my bulk of my assets under management for my personal portfolio um, is in TNA for wheel trade. It just keeps paying. Comparatively to IWM, I wouldn't mess with it, but I do sometimes trade some spreads in IWM, and those spreads become pretty lucrative. They make some pretty good moves. So comparatively, if I was to run debit spreads in TNA, they wouldn't do as well as they do in IWM. So like I'll go and do some speculative stuff with debit spreads on IWM over TNA, but my income strategy, my sell to open options, that's in TNA. That's where my performance is.
If you're looking directional, and I do this a lot with levered ETFs, take a look at doing a credit spread on IWM calls and using that credit to finance a TNA call.
That's a good
That
idea.
way, you've got unlimited upside. I mean, you need a bigger move than just, buying the outright.
Right.
But if you're wrong and small caps crater, you break even.
Good point. Because you've used the credit spread to pay for the long position. I
Yep.
like that.
And your risk is IWM doesn't move.
Right. And right now it's volatile enough to where I think it's gonna move. I'm looking for maybe hitting resistance between here and maybe about the last high. So maybe up in the 221, 222 area before backing down. And then it looks bearish for at least a reversion trade down to like 213, 214. Just in
I
the,
mean, small caps are going to be the big movers tomorrow because they're the
yeah,
most interest rate sensitive. And the problem is which way? I don't
right.
know. But whatever happens, they're going to be the big movers tomorrow.
So I'll wait till sell a put till tomorrow on TNA, but I might be selling some covered calls in the like 46 strike area because the volatility is going to be there. It'll push the premium up. Cool, man. Yeah, I still got to calculate because I was pretty much on a mini vacation from Thursday through Sunday, so I haven't drawn it up yet. But I did get called away on my covered call on half my position on TNA because I had sold a put before that I got assigned on, and then ended up doubling my position. So I sold covered calls only on half my position that were closer to the money, so I could exit. That was my plan, is to use the covered call to exit for a profit on that half of the position. And then I'll take that and net it against my cost basis and continue generating income on it. So the rest of my position, I can go and sell covered calls up in the 46 strike area, I think is appropriate. And then tomorrow, if we get a massive pullback leading up to, or even on the outcome of FOMC, and we do get that reversion trade to $40, I'll start probably selling some $38 puts. And that's my plan.
Cool.
It's pretty passive, but it works. But anyway, yeah, I think we've got some volatility in store for tomorrow, and things could go either way. We're gonna see some big moves. Market's more or less priced in the anticipation or the speculative part of what they're expecting tomorrow, I think. But the outcome, I think, is going to give us a quick volatile snap one way or the other. And looking at that SPY chart, I think we've pretty much, or not SPY, QQQ. We pretty much nailed it. When we see these diamond patterns form, we know there's volatility in store, and we picked one off today. It's there, and here we are hitting the bottom of it already.
Just one negative.
Nice. And I think it's going to play in this range for the rest of the day. It may snap back right to this angular. God, that looks like crap on the 2 hour. 15 looks better. There we go. But essentially, we're looking at, if we hold this area and we start to bounce back, we'll just accumulate some speculative positions and start weighing out possibly a condor setup for tomorrow. Either we're going to be, running the bull. Let me compress this chart all the way up into this LZ up here, or we're going to be running a bear down to here. One way or another, we're going to get a break. Cool. I think we can wrap it, man. Anybody else have any comments out there? I've been watching the chat, and I've got a few people watching, but no one comments. Hi, everybody. We're here. We take requests. Think of us like the better call-in show than Kramer could ever do, because instead of hitting a soundboard and doing a bunch of dancing around on a stage, we'll actually give you some data and some technical analysis. So if you guys ever want to throw us a ticker, even in the middle of our broadcast, feel free. That's what we're here for. We're here to help, and we can provide you some technical analysis on anything you throw at us. We're good at it. We're holding a pretty high percentage of being right. 94% accuracy is pretty damn good. Not many groups of analysts out there can really hold a candle to that, as far as I know. But not to break our own arms patting ourselves on the back, but I think we make a great team here, Matthew and I, and we produce some pretty nice results. So tell your friends. Yes, we're here. Anyway, thanks again. We'll see you guys later in the week. We'll see you Thursday, same time, 11:30, and probably hang out and shoot the breeze and maybe throw some shade at Kramer till 12:30 or so. Anywhere from 40 to an hour. We'll see you guys next week. Thanks again.
Thanks.